There is a date you need to remember, June 24th, 2016. The sun rose over London that morning, but something had changed in the night. The screens in the trading rooms were bleeding red. The pound sterling, the currency that had once ruled a quarter of the globe, was in freefall. It dropped 10% in a matter of hours. We are told that Brexit was about sovereignty, about control, about taking back borders. That is the story they sold. But that is not what happened. What happened was, a nation walked into a bank, tore up its credit rating, and set fire to its own balance sheet. This was not a political revolution. This was a financial suicide. Let me be clear about something. Nations do not fall because of bad ideas. They fall because of bad debts. They fall because the ledger does not lie. And on that morning in June, the ledger told the world a simple truth. Britain had just bet its entire economy on a fantasy. The bet was called Brexit. And the bill is still being paid today, in crumbling hospitals, in rotting infrastructure, in wages that have not moved in 15 years. This is not a story about politics. This is a story about what happens when a country forgets that economics is not optional. Gravity does not care about your flag. Britain in 2016 looked like a titan. It was the fifth largest economy in the world. The city of London was the financial capital of Europe. It had the pound, the monarchy, the history, the prestige. Tourists filled the streets. The banks were full. The restaurants were packed. On the surface, it looked like everything was fine, but beneath that surface, the engine was broken. It had been broken since 2008. The financial crisis had shattered something fundamental in the British economy. Productivity, the only number that actually matters, had flatlined. For the first time in modern history, British workers were getting poorer every year. Wages were falling in real terms. The government had spent a decade cutting investment in roads, schools, hospitals, trying to balance the books. The public was exhausted. They were angry. They were looking for someone to blame. And that is when the trap was set. The trap was not built by Europe. It was built by Britain's own leaders. David Cameron, the Prime Minister, made a gamble. He promised a referendum on leaving the European Union. He did not do this because it was good for the country. He did it to win an election. He did it to silence the extremists in his own party. He thought he would win easily. Every economist, every bank, every business leader told him that leaving the EU would be economic catastrophe. But Cameron believed in his own luck. He had won before. He assumed the British people would never vote to make themselves poorer. He was wrong, and that mistake would cost Britain hundreds of billions of pounds. The Leave campaign did something brilliant and poisonous. They turned economics into emotion. They painted a bus bright red and wrote a lie on the side. £350 million a week for the National Health Service. It was a beautiful lie. It told people that their suffering was not their fault. It told them the problem was not the bankers or austerity or a broken productivity model. The problem was Europe. The problem was immigrants. The problem was Brussels. If Britain could just cut the cord, all that money would come flooding back. The hospitals would be saved. The jobs would return. Britain would be great again. It was a fantasy. But fantasies sell better than spreadsheets. The Remain campaign tried to fight with facts. They talked about trade tariffs and supply chains and GDP forecasts. They wheeled out economists and central bankers. They warned about recession and job losses. But you cannot fight a feeling with a forecast. You cannot fight nostalgia with a pie chart. The Leave campaign had weaponized anger, and anger is a hell of a drug. On June 23, 2016, the British people went to the polls. Turnout was massive. 72% of the country voted. When the results started coming in after midnight, the financial markets began to panic. The first shock came from Sunderland, a working-class city in the north. It voted Leave by a huge margin. This was a city that depended entirely on a Nissan factory that exported cars to Europe. Logic said they would vote Remain. But logic had left the building. By 2 in the morning, it was clear. Britain had voted to leave the European Union, 52% to 48%. The margin was razor thin, But the consequences were catastrophic. Within minutes, the currency markets went into meltdown. Traders in London, New York, Tokyo, they all started selling the pound. They sold it in waves. The graph of the pound that night looks like a heart attack. It fell from $1.50 to $1.32 in a matter of hours. This does not happen to major currencies. This happens to currencies in war zones. This happens when a government collapses or a central bank goes rogue. But it happened to Britain, because the market had just realized that Britain had chosen to amputate itself from its largest trading partner. The surgery was voluntary, and there was no anesthetic. David Cameron resigned the next morning. He walked out of Downing Street humming a tune, leaving the country in flames. There was no plan for what came next. The people who had led the Leave campaign had no idea how to actually execute a withdrawal. They had sold the dream, but they had not written the manual. And the economy does not wait for politicians to figure things out. The economy moves at the speed of fear, and fear moves fast. Business investment froze overnight. If you are a CEO and you do not know what the rules will be in 2 years, you do not build a factory, you do not hire staff, you do not invest in new equipment, you sit on your cash and you wait. And that is exactly what happened. Investment flatlined. Growth stalled. The invisible cost of Brexit was not just the money that was lost. It was the money that was never made. The currency crash had an immediate effect on your shopping bill. Britain imports nearly half of its food. It imports fuel, electronics, clothing, medicine. When the pound crashed, all of that became 10 to 15% more expensive overnight. Inflation started to climb. Wages, which had finally started to creep up after years of austerity, were hammered back down. The average British household became poorer, not in 5 years, not in theory, immediately. The price of oil went up. The price of bread went up. The price of everything went up. It was a pay cut for the entire nation. And most people did not even realize it was happening because the price tags did not change on day one. They changed slowly, week by week, as the costs filtered through the supply chain. But the real damage was happening in the arteries of the economy. Trade. Britain had spent 40 years integrating its supply chains with Europe. A car part made in Germany would arrive in a British factory in the morning and be installed in a car by the afternoon. There were no border checks, no customs forms, no delays. It was seamless. Brexit ripped that system apart. Suddenly, every truck crossing the border needed paperwork. Every shipment needed inspections. Every product needed certificates. Small businesses were the first to die. Imagine you run a small cheese company in Yorkshire. Before Brexit, you could send a pallet to France as easily as sending it to London. After Brexit, you needed veterinary certificates, customs declarations, and an agent to handle the forms. The cost went from £50 to £200. The time went from 1 day to 5 days. For a small business with thin margins, that was the end. Thousands of exporters simply stopped selling to Europe. It was not worth it anymore. The government called it teething problems. They said businesses just needed to adapt. But this was not adaptation. This was amputation. Britain had cut off its own arm and was pretending it could still lift weights. The numbers told the story. British trade with the EU collapsed by 15% in the first quarter. Exports fell. Imports fell. The whole system seized up like an engine without oil. And while the rest of the world was bouncing back from the pandemic, Britain was sinking deeper. The Office for Budget Responsibility, the government's own independent forecaster, calculated that Brexit would permanently reduce the size of the economy by 4%. 4% of GDP is £100 billion a year. That is more than the entire education budget. That is hospitals that are not built. That is roads that are not repaired. That is nurses that are not hired. It is money that simply vanished into the void. And then came the labour crisis. Part of the Brexit promise was control over immigration. The Leave campaign had said that European workers were taking jobs and driving down wages. So the government ended freedom of movement. Polish builders, Romanian fruit pickers, Spanish nurses, they could no longer just come to Britain and work. And suddenly, the economy realized It had a problem. The farms could not find workers to pick the strawberries. The restaurants could not find chefs. The hospitals could not find nurses. The transport industry could not find truck drivers. We saw images of farmers plowing vegetables back into the ground because there was no one to harvest them. Tens of millions of pounds worth of food rotting in the fields. Then in the autumn of 2021, Britain faced a fuel crisis. Not because there was no fuel, because there were no drivers to deliver it. Petrol stations ran dry. People panic bought. There were fights at the pumps. It looked like a country on the edge of collapse. The government tried to offer temporary visas to truck drivers. Come for 3 months, then leave. The drivers laughed. Why would they come to a country that had spent 5 years telling them they were not welcome? Why would they deal with all the new paperwork when they could work in Germany or France with no hassle? The labor shortage drove up costs. If you cannot find a driver, you have to pay more. If you pay the driver more, the goods cost more. This was not the good kind of inflation that comes from growth. This was the bad kind that comes from scarcity. Britain was now trapped. Low growth, high inflation, falling trade. Economists have a word for this: stagflation. It is the worst of all worlds, and it was entirely self-inflicted. But the final act of the tragedy was still to come. In September 2022, a woman named Liz Truss became Prime Minister. She was a true believer in the Brexit fantasy. She thought the problem was not that Brexit had failed. She thought the problem was that Brexit had not gone far enough. She wanted to turn Britain into a low-tax, deregulated paradise. She called it Singapore on Thames. She stood up in Parliament and announced the biggest tax cuts in 50 years. Tax cuts for the rich, tax cuts for corporations. But she did not say how she would pay for it. She did not publish a forecast. She did not consult the Independent Budget Office. She just declared that growth would magically appear and pay for everything. The financial markets heard her speech, and then they destroyed her. The reaction was instant and brutal. The bond markets revolted. These are the investors who lend money to governments by buying bonds. They looked at Truss's plan and saw a country with high inflation, high debt, and falling growth deciding to borrow even more to fund tax cuts it could not afford. They stopped buying UK bonds. The price of bonds collapsed. When bond prices fall, interest rates spike. And that is what happened. The cost of government borrowing exploded. Mortgage rates soared. Pension funds, which had invested in government bonds thinking they were safe, suddenly faced collapse. They needed cash immediately to cover their positions. They did not have it. They had to sell assets in a panic. It was a death spiral. On the morning of September 28th, the Bank of England received a terrifying phone call. The pension funds were hours away from insolvency. If the bank did not intervene, millions of people would lose their retirement savings that afternoon. The Bank of England had to step in and print £65 billion to stabilize the market. They had to bail out the country from its own prime minister. The pound fell to its lowest level in history against the dollar. It came within a whisper of parity. £1, $1. For a currency that had once been the backbone of global trade, it was humiliation. Liz Truss lasted 44 days in office. She was outlasted by a head of lettuce that a newspaper put on a live stream as a joke. But the damage was permanent. The markets now saw Britain as unstable, unreliable, a risk. Every loan, every investment now came with a Brexit premium. The cost of borrowing went up for the government, for businesses, for homeowners. Mortgage payments jumped by hundreds of pounds a month for millions of people. This was the Truss tax. But really, it was the Brexit tax. Let me give you a number that should make you stop and think. Since the Brexit vote, the UK economy has grown slower than every other G7 country except Russia. Let that sink in. Russia is under the heaviest economic sanctions in history. The entire Western world is trying to bankrupt Russia. And Britain, without any sanctions, without any war, is performing almost as badly. That is the scale of the wound. The UK is the only major economy that is still smaller than it was before the pandemic. Italy has overtaken Britain. Poland is catching up. Britain has gone from being the sick man of Europe in the 70s to being the sick man of Europe again in the 20s. History does not repeat, but it sure as hell rhymes. The tragedy isn't just in the numbers, it's on the streets. NHS waiting lists stretch to 7 million. Cancer patients wait months. Ambulances arrive late. Schools are crumbling because the concrete is unsafe and the money is gone. Police often ignore burglaries unless there's CCTV. Potholes cover the roads. Trains run late. The public realm is exhausted. This is what economic decline looks like. Not a crash, not drama. A slow, grey decay. Lines, broken services, failing infrastructure, a country running out of time and money. And the worst part is the silence. For years, the main political parties refused to talk about Brexit. The Conservatives could not admit they had made a mistake. The Labour Party was terrified of offending Leave voters in key constituencies. So there was a conspiracy of silence. The elephant was in the room, smashing the furniture, and everyone pretended it was not there. Only now, in 2025, is that silence starting to crack. The polls show that a majority of Britons now believe Brexit was a mistake. Even people who voted for it are changing their minds. They look at their energy bills, they look at the food prices, they look at the news, and they say, this is not what we voted for. They were promised sovereignty. They got solvency crisis. The fishermen who voted for Brexit because they were promised their waters back found that they could no longer sell their fish. The border delays killed the shellfish before they reached market. Scottish fishermen went bankrupt. The Sea of Opportunity became a graveyard. The farmers who were promised freedom from EU red tape found themselves undercut by Australian beef imports in a rushed trade deal that the government signed just to prove Brexit was working. British farmers are now selling their land because they cannot compete. The car factories that were promised a bright future are now facing closure because the supply chains are broken. Honda closed Swindon. Nissan is hanging by a thread. Britain is deindustrializing again. And what about sovereignty? The promise Brexit was sold on. Britain has less of it than ever. To trade with the EU, it still follows EU rules, but now it has no voice in writing them. It became a rule taker, not a rule maker. Immigration was supposed to fall. Instead, it hit record highs, over 600,000 net migrants in 2022. The flow didn't stop, it just shifted from Europe to the rest of the world. The demographic change Brexiteers feared accelerated, while the economy became less flexible without access to the European labour market. Britain traded efficiency for the illusion of control, and illusions do not pay the bills. In the modern world, sovereignty is solvency. You can wave flags and invoke history, but if markets lose trust, power disappears. Britain learned this the hard way. Investors stopped seeing it as a safe haven. Bond yields rose. The pound fell. The cost of living climbed. The country became poorer. There is one graph historians will remember: G7 GDP per capita since 2016. Every line rises, except Britain's. That flat line is the evidence. No invasion, no natural disaster. Just a choice made in a ballot box. Brexit wasn't a shock. It was self-inflicted, slow, predictable, and still being paid for.